Support for Short Stops is presented by the Caylum Trading Institute. Check out our website at www.cayluminstitute.com. On today's episode,
our single best chart looks at the triggers of bear markets. It shows how bear markets don't just pop out of the air. They're caused by tight money or recessions, or in some cases, both.
Call it what you want, a game, an experiment, a gamble. But stock trading in the global financial markets to us is a business. Every day you're surrounded by the noise. Buy, sell, hold, buy more. And we're going to quiet it down and filter out the best trading strategies, tips, and stock picks. You want information on how to find your next bagger or home run? You'll find it right here on Short Stops.
Welcome everybody to episode 17 of Short Stops. Today I'm with Citisecurities Investment Analyst Jason Mariposa.
Hi guys, I'm finally here after 17 episodes.
And today's topic is all about understanding crashes and corrections. How do you define crashes, mania, bubbles versus just a simple correction?
Market crashes come from usually there's too much excess in the market. There's build-up of credit. So the market correction is simply that there may be something happening in the short term, but big picture there's no systemic risk.
So how different is what we're experiencing now versus a bear market?
I think what's causing the correction now is a big factor is the rising rates in the US. So rising rates usually result in corrections, especially in emerging markets. But if you check, historically, rising rates lead to bull markets, and when rates are going down,
that's when it's become concerning.
That's when bear market is coming. Mm-hmm. So it's really the opposite.
Okay. So if you look at every year and a half, 2016, 2015, 2013, 2011, we almost had more than 20+% corrections. And I assume it's because of what you say, there's no systemic risk in the market. How often and how long do these corrections normally last?
Okay, so in the past 5 years, we have three major corrections in the Philippine stock market.
Okay, this is...
So the first one is in 2013. It was the taper tantrums. So it's when the U.S. Ben Bernanke said that he was gonna taper off the quantitative easing of the Fed. So that was a 25% sell-off.
On the one in 2013.
Yeah. So next one is 2015. It was from there were a lot of fears of China hard landing. So that was a 22% sell-off. And the last one was when Donald Trump won as president in 2016. So that was a 19% sell-off. So if you look at the range of the PEs back then, it ranges from 16 to 21 times at the peak.
And then at the bottom, you're saying it's around
15 to 16.
Okay.
So in the past 5 years.
And just to confirm, all the things that happened from 13, 15, and 16, most of these things were all external?
Yes, all external.
Okay. How long did the drop from the peak to trough normally take?
They usually happen between 2 and 3 months.
That's from top to bottom?
Yes.
So it's around 60 to 90 days?
Yeah, 60 to 90 days. So the magnitude is, 20 to 25%. So the time is around 2 to 3 months from peak to trough. And another thing we look at is net foreign selling. So that's actually a very useful indicator because all of these things are really caused by foreigners going in and out of the Philippine market. So in the past three corrections, it's been between 1 and 3.6 billion US dollars.
During the sell-off?
Yeah.
Okay. So in today, what's the...
So judging just by using those three previous sell-offs, I would say that we're right in the middle of a correction.
Isn't it been almost 3 months already?
Yes, it's been almost 3 months, but the magnitude, only been around 14% from peak to trough.
Okay.
And then if you look at the PE, it's 17.6. So it's again between 21 and 15. Right. And then when you look at net foreign selling, it's been almost $1 billion. So by historical standards, we're actually, I would say, still in the middle of the magnitude phase of the correction.
Despite it being a little bit longer than the previous ones?
Yes.
So basically, what's different right now versus what happened in 13, 15, or 16?
Because the previous three times, they were all mostly external, just affecting the Philippines. But this time, I think what's different is that rates are definitely rising today. So in the previous three times, actually the Philippine 10-year was at 3 to 4%.
At record lows.
Record lows, right? So right now, the Philippine 10-year is around 6.5%, right? And inflation looks to be rising already.
Together with a current account deficit.
Yeah, so you have a twin deficit, right? Current account, fiscal deficit. And then you have inflationary pressures coming in to the economy. So I would say the situation is slightly different from before. So what could happen is that these things could usually destabilize the currency, right? So you have twin deficits, rising oil prices, and then what's happening is the BSP isn't raising interest rates.
Well, they just did,
Right,
but
they
it
just
might
did,
be
yeah.
not enough.
So the BSP raised rates last week from 3 to 3.25%. Okay, but what I've been reading is that this is not enough, right? Because if you think about it, inflation is maybe going to average 4 to 5% this year, but the BSP policy rate is at 3.25%. So that means that real rates are a negative 100 basis points. This is not enough to stop the inflationary pressures.
Or the
going
fears
forward.
of the
Yeah.
possibility of that happening.
Yes.
But there's also the defense of the BSP that when they look at these scenarios, they view this as a one-off rather than as something continuous when it comes to inflation.
A lot of the inflationary pressures are one-off, but I think that's missing the big picture, right? Because when you think about it, the Philippines has been booming for the past 6 to 7 years. Since we have an already booming economy, then you add a stimulus in an economy that's already been booming for the past 6, 7 years. So what's that? The fiscal stimulus, right? The train has passed last year. So this year, I think they're charting a 50% increase in infrastructure spending, right? So you're gonna spend a lot more money. Yes, we're gonna have more infrastructure, so more capacity. But how long will that take, right? How long does it take to build a bridge or like build a subway? Maybe 5 to 10 years, right? So short term, it's definitely going to be
Painful
inflationary.
ride. And a painful ride also.
Yeah, it's going to be inflationary. So what people are afraid of is that the BSP is behind the curve, meaning that inflationary pressures are building, but they're not doing anything about it. So that, I think, is the major reason why the peso is so weak, and consequently the stock market as well.
But I think on the other hand is that the reason why they're keeping the rates low also is that they keep the borrowing cost of the central banks also as low as possible just to finance all these things that are happening in between.
So of course the BSP will never say this directly, but I think that's what's happening right now. Because actually the central bank should be independent from the whole government. I mean, it doesn't matter if they're going on an investment binge right now. I mean, it's not the central bank's policy to finance that.
Okay.
So it's called monetization already.
Okay. That's true also. One last thing on that end. Marami kasi sinabi about long-term projects for most of these infrastructures. Do you view this as an opportunity at the right price? Or is it something to be scared of?
I think it's definitely an opportunity. So if you think about it, the thesis of the Philippine economy hasn't changed at all, right? I think what's happening right now is you have this short-term financial stability risks. So, but the entire story of the GDP growth, 7%, I think that's still going to be intact in the next few years.
Driven by the same consumption story plus
Yes,
infrastructure.
Plus infrastructure. But of course, the path going there is going to be rocky and I would say exciting. Right? Because I think we definitely have a chance to buy cheap. So it's, I think, getting it at the right price.
In layman's terms, how is this all beneficial for the Filipino?
We definitely need infrastructure. We ply the roads of Metro Manila every single day, right? So we're stuck in traffic. I mean, just going from Kansas City to Pasig, it takes almost 2 hours in rush hour. So I would say definitely we need infrastructure. So it's going to be good for the Philippines in the long term. But of course, in the short term, as I said, there's a lot of financial stability risks building up in the system. So it's definitely going to lead to a lot of volatility in terms of stock market, bond market, peso, and all of that. I think the worst case scenario would be that the inflation scare turns out to be real. So I guess we're going to find out the second half of this year. Like, for example, if inflation goes from 6%, 5 to 6%, right? The BSP's target is 2 to 4%.
Then we have a problem.
So what could happen is the BSP could suddenly hike rates
Maghahabol sila.
So now it's 3.25. They might raise that to 4, 5, 6. You don't know. So these things happen a lot already. If you look at Indonesia in 2013, right? Same story. Rising oil prices. You have twin deficits, current account deficit, fiscal deficit, right? So what happened was the 10-year was also rising in 2013. So there were a lot of financial stability pressures building up. So of course, when the shit hits the fan, foreigners pull out. So we have capital flight. In that case, the Bank Indonesia was forced to raise interest rates from 5 to 7.84% in 1 year.
Wow.
In 1 year. So that's what could happen in the Philippines in the short term. So of course that led to a slowdown in the economy.
But today, since 2014, because of what happened,
Of course, after a while, things stabilize. Then actually, right now, Indonesia is back in all-time high again. So these are all short-term pains.
so at what prices is it a bargain for you? We start buying at these levels and close our eyes and close the computer.
So we're looking at a valuation of maybe 15 to 16 times PE. So that's going to be around 6,600 to 7,000 in the index. So at that point, I would say that all the risks are already priced in. And as we said, this is only a correction. So it's a chance to get in a much bigger secular bull market.
The biggest challenge is always having the discipline and waiting for this to finish and not getting in too early also.
Yes. So I would say during these times, it's better to be late than early, right? Because if you're a little bit late, at least everything's gone down already. You can take your pick, right? But if you're early, baka maipit ka na. Tapos bumaba yung mga Ayala or SM Prime. I mean, the bluest of the blues, right?
Just to summarize everything we've talked about today, we shared the difference between a bear market versus a correction. And Jason shared that he thinks it's a correction. So let's just hope and pray that he is right. Thanks, Jason.